Hello everybody and welcome to today's video. So today I want to talk about Figs. So what is Figs, you may ask? Figs is a 10-year-old lifestyle brand in the healthcare space. They focus on making scrubs stylish and they try to go after the old generic scrubs and replace them with their lifestyle brand. What is a lifestyle brand, you may ask? Well, a lifestyle brand is a brand that attempts to embody the values, aspiration, interests, attitudes, and opinions of a group. And today's digital world uh, allows the creation of hyper-focused brand. We all live in a world of our own, and advertising now allows to have brands that are very, very, very targeted. But that didn't used to be the case. Until the 2000s, it was very hard to target a brand just for a tranche of the population. In the past, brands could only exist as mainstream brands. They could only be for the typical consumer, the customer that would tune at night for evening news, because that was the only way to reach consumers. So mass marketing created these consumer personas that are so broad but they really don't fit anybody because they are too broad, because the mass market typical consumer, this marketing dream, really doesn't exist when you dig a little deeper into people's needs. We all have different needs and different things that we like. And today's digital world allows for the creation of hyper-focused brands because we all live in a world of our own, right? We have customized newsfeed. We admire and follow different people. We watch different TV shows, and there's a lot of them. We have different values. So the typical consumer is really, really slowly going away and being replaced by more specialized consumer. This is a shift from mass market brand to hyper-focused brands. And that's why so many old world brands are struggling because they don't resonate with a modern consumer who wants something better tailored to their very varied and diverse needs. And so new brands are emerging to fit a specialized buyer. I believe Figs is one of these brands that's emerging to fit a specialized buyer. Old jack of all trade brands, we do it all brands, stuck in the middle brands are dying because the mainstream or typical consumer may have just been a myth of mass market advertising, not the reality. And let's compare. Let's just do a small comparison here between two companies in the same sector. On the one hand, you have Kohl's. Kohl's is a mass supplier of all sorts of clothes. They do it all. They have all of the clothes you could think of. They are the jack of all trades of clothing. They're stuck in the middle. Kohl's thrived, until the 2000s, because you could get all the mass market clothing you could ever dream of. But as an investment today, look what happened. Since 2010, a company like Kohl's, and you would think Kohl's has the broad mass appeal, the mass market appeal is with Kohl's. It struggled. You would actually have lost 9% over 13 years with Kohl's. You didn't even keep your money in nominal terms, let alone in real terms. Lululemon, on the other hand, which is a hyper-focused brand, very, very hyper-focused Lululemon, we'll see. Lululemon, the hyper-focused brand, did a 20x in 13 years. And how could they have done that? They only focus on a tiny segment of the market, right? Do you know what Lululemon does? Probably, but I'll just say it for my argument here. So Lululemon, how did they get started, right? Lululemon started as a brand for yoga. That's all they did. You know, still today, their website says they're yoga inspired. They're a technical athletic apparel company. I'm going to ask you, this is where I see similarities. Figs started today as a brand for scrubs. They do scrubs. So I could argue scrubs are even more in demand than say yoga pants or yoga apparel. So both are starting with a tiny market. Here's another thing that both do. Because either the brand for yoga, like the pants for yoga, fitness pants in the 90s, or scrubs in the 2010s, because these were mass market products, more generic type products that you could not brand to a higher end or higher paying consumer, they've been bare bones. They've been bare bones, right? Old marketing suggests that you could not market those on television, and so they've created a minimally viable product, and they've been minimally viable. And so what Lululemon fixed in a way is that they made women's sportswear stylish. They made them stylish. They took a product that was not stylish and made it stylish. Um, and the whole idea that people buy clothes. What is one of the main functions of clothes? Well, to look good. That's one of the main functions of clothes. It's a very old principle. It's called the "what is good is beautiful" phenomenon. That's the whole reason why you don't want to buy an ugly house. You don't want to buy an ugly car. You don't want to buy ugly clothes. This is kind of a basic human trait that we all share. And because of the generic nature of yoga pants back in the 90s, people really didn't want to have a brand around them. There was no brand around them because there was no specialized buyer that could be catered to. Same for scrubs. There were no specialized buyer that could be catered to until technology came around, and now technology is here. And so figs is probably, I would argue, and I'll show you the pictures, they're making scrubs stylish. And so I ask you then, just like for Lululemon, Lululemon expanded away from the yoga pants. Are there expansion opportunities beyond scrubs for figs? Are there? You know, I think so. I think so. So when I look at this picture of this doctor right here wearing his figs outfit, I'm sorry, but it looks more stylish than actual scrubs. I'll show you a picture of scrubs in a second. So this is what they do. Um, if you look, feel free. I mean, this is a scrub trouser. So this is for a medical field. This is for the medical field, right? If you go on, this is something that they try to sell to the medical sector. The on-shift jacket, why not, right? Focusing on the medical field. When I look at a picture like this, for example, I ask myself, is this a scrub? I mean, this is a scrub, but is this really a scrub, right? They're trying to make these products stylish, so they're catering to a fundamental need. Keep in mind, if you work in the health sector and you wear this stuff for 10 hours a day, that's going to be important to you. That you have actually at least a product that fits, right? And this is another one, right? So this is one of their campaign. They try to build a brand. Why wear scrubs when you can wear figs? That's brand building right here. So there's features of figs that make me think that it could be an investment even better than Lululemon. So first of all, they're calling it medical apparel. They're going all in on fashion and style at the hospital. That's what they're trying to push. Could fashion and style at the hospital get out of the hospital and make it even more mainstream? Just like fashion and style in the yoga industry got out of a yoga studio with Lululemon. That's point number one. Another thing that I love about this sector, right? There's a lot of discretionary income, especially for doctors. So there's a lot of discretionary income, and you can make high-end products. So not only do you have demand for a product, but you can also make it, right? Then another thing that I think is very great for this company is scrubs are worn a lot, and they need to be replaced. So you have kind of a recurring buy where people come back to the website and buy new scrubs because they get them dirty and because they wear them every day, right? It's a piece of clothing that you wear every day. It's not like buying a shirt and you wear it twice a year. No, 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 no. These are high demand products. And lastly, I love the direct to consumer model, which no physical stores, kind of a classic of modern investing. Um, so moving on here, let's look at the financials. So the financials of Figs. Figs has had okay revenue growth over the past few quarters and outstanding revenue growth in 2020, 2021 because demand discretionary incomes in the healthcare space was really, really high. There was a strong demand in 2020 and 2021. And now, of course, life kind of got back to routine. And so now, of course, the healthcare sector demand, normalized. Therefore, they're just under my threshold of 30%. But I think they have a potential to stay at that threshold a very, very long time. And thus the question is, it's all about terminal value. What if they grow 25 to 30% a year for the next 10 years? If they do that, you have a Lululemon in the making, right? So the numbers of growth are just at my threshold, and I'll give it a pass, as you'll see, because this company has a lot of potential, I believe, in other areas. So I'll show you it. But this is an example. So you see we're growing much faster, 2019, 2020, now 25%. They're growing quickly at international, beginning with Canada, and then they're going to go to Europe. And they're growing their non-scrub outfits quite a bit, growing customers, growing average basket, right? Average size of a basket, new product launches. I believe they're growing well on a lot of these metrics. Order value, right? Your average basket, average order value. So if they can keep growing at this rate for a long time, they could become much bigger and be one of the more successful companies in this industry. So I like the growth, although it is just under my threshold. But there's things that I like much more about figs. First of all, I want to talk about the competition. And this is, let me show you this. This is what typical scrubs look like when you buy them from a medical supply company. So some hospitals will provide scrubs, and as you can see, going back to the mass market, they are very, very, very mass market, right? A little bit like buying a dress shirt. They are very, very, very mass market, right? This product fits just about everyone. They're scrubs. Compare this to what I was showing you earlier, more stylish clothing like this or like this. All right, feel free to pause. So if you compare the clothing, the stylish clothing of this compared to this, I think I think you can make a case that the product is multiple times better. Maybe not an order of magnitude, but multiple times better. So I think medical supply companies need to worry about this because and one of the aspects, by the way, that figs is pushing quite a bit is the whole fit, the idea that your clothes need to fit, and they have all of these different fits that you can use when you buy figs. So I think this is an important part of the playbook. Then there are competition that I think is credible, like Janu is credible competition. Grey's Anatomy, I don't know much about these brands, but I think they could be credible competition. But this is a very, very big market. And then there's competition that I'm not worried about, and that's charismatic brands, which is Cherokee and Dickies. I am not worried about it all about this competition. They engaged in a frivolous lawsuit against Figs, which they lost on all counts. And in that lawsuit from 2016, there were a bunch of like emails shown about the CEO of charismatic brand really being worried and trying to attack Figs and trying to shut them down before they get this big. So we have a lot of evidence that charismatic brand is worried about Figs, and you can look at the lawsuit, and they created a website on facts and Figs and Facts is the website, and you can read the whole process of a lawsuit that they have with charismatic brand with some of the emails that they exchange internally about the fear that they have for this company and about how much this company is taking market share from Cherokee and Dickies. And my guess is that Janu and Figs, which were kind of started in similar circumstances, my guess is that they are taking a lot of share from these two brands, a lot still today. Concentration, healthcare, the space, and USA, the country. But I think they're expanding both of them. And by the way, this is recession resistant healthcare. It's really, really good sector. Growth runway, healthcare. Demographics are making more and more people get older, and as we get older, there's more medical services that are provided. And it's a lifestyle brand, which is a big shift, I believe, in how clothing is marketed and how clothes are sold in general. Customer retention. It's all about customer retention. Figs has recurring sales because of the nature of a product. And let me show you this. This was interesting. I didn't know this. But scrubs are so in need that hospitals actually have dispensers. So if you are in the healthcare sector and you need to buy scrubs, you can buy them at the scrubs dispenser. And then you buy something that looks like this. So again, I think there's a lot of opportunities for business. There's a lot of opportunities for recurring revenue. Who knows? Maybe they could have a subscription one day. There's a lot of potential that I see in this company. This is clearly a product that is heavily used around the world, and that is in the process of being disrupted, in my view. Macro sensitivity is low because it is a recession-resistant sector. Growth by acquisition, none that I could find. SG&A, right, as a share of revenue, operating expenses. So you can see it's a lot of marketing. Like we spend a lot on marketing and selling, but again, it makes sense if customers keep coming back to the product. This makes a lot of sense. If this thesis holds, and once you acquire a customer, they buy again, which is what is showed here. You have active customers that are growing really fast. Customers that buy again. If they buy again, then this is a win. Marketing can be thought as an investment. Either way, another good point is that marketing as a share of revenue is going down going forward. So you can expect over another 2 to 3 years, i.e., 8 to 12 quarters, if you keep dropping by 0.5% or 1% each quarter, you're going to slowly increase your net income. So this is trending in the right direction, I believe. Moving on. Any near-term bankruptcy risk? No. There's no near-term bankruptcy risk. Gross margin is very high at 70%. It's super high. I mean, for clothing, this is a physical product you're selling. It's super high margin. And they have EBITDA margin and net income. So, of course, I typically don't focus much on these metrics. Whether it's GAAP or non-GAAP, I like to look at gross margin. I think gross margin is a much better indication for growth stocks. The gross margin is very good, and they have cash, and they are not cash flow positive, but almost. So they have enough. I mean, they can, with the cash flow level that they have right now, they can go 10 years without any issue. They're almost cash flow positive. Debt is not a factor. They have almost no debt. What about dilution? Very interesting. Dilution is very rare that I see a company reducing float. They just reduced float, so there's fewer shares. The past quarters they reduced their float, so this is good. But otherwise, it's fairly flat. I mean, if you look to me, we're looking at something that is fairly flat here. Although keep in mind, adjust for yourself, but keep in mind I have much greater tolerance of stock-based compensation and dilution than most people. I tend to be very lenient on this because it's a way to save cash for the company, and it's a way to keep cash. When a company issues share, a company gets to keep cash and puts bankruptcy away. So I like that. Insider ownership is very high at 25%, and the company is still founder led. And what I love about Figs, here we go, revenue per employee. It's very high. You know what? Even in the past tech firms, I haven't seen that. The revenue per employee is almost $2 million. 1.85 million is the revenue per employee. Are you kidding me? I love this business model. This is a wonderful business model. Get clothes manufactured, bring them here, and sell them. That's like the business model. It's stunning. It's a great business model. So this company is able to scale and scale fairly quickly without that many employees, which is nice. All right. And in conclusion, I reran the stock through my valuation. I reran it through my valuation. And this is what we get. This stock is one of the cheapest stocks out there. If you've seen my the most undervalued stock to buy spreadsheet, which I will add fix to it in the next Friday, if you've looked at this, you know that this is very low. So this is almost as low as HIMS, for example, which is another stock that I'm pounding the table, which is very cheap. So you are paying almost nothing for these percentage points of growth. And if you do enterprise value or trade retail month, it's a 4. The average of all of the stocks I've analyzed is a 17, right? So 4x cheaper than the average stock that I analyzed in my framework, right? Forward gross profit, if you take into account growth, you're again not almost 4x, right? Almost 4x cheaper. And then here you're also cheaper. So everything's cheaper for this company. So I like the price. I think the price is very inexpensive, especially when we consider the disruption potential of figs. Figs as a potential to disrupt a very large market. And if you look at the stock could be this could be any SPAC, and figs was a SPAC. So just like any SPAC, this stock crashed for indiscriminate. It's crazy. Like the stock was trading at $44 in September 2021. Now it's trading at 8. For a company that really could grow at 25 to 30% for a foreseeable future. So ask yourself, if it grows for 25 to 30% for the next 5 years, next 7 years, I believe this is setting up to be a very, very, very good investment. So my commentary is what? The company is not going to go bankrupt. They have a high net cash position, a little bit cash flow negative, but that's okay. So they're good on that. The company has GAAP earnings. I mean, this should be making Wall Street happy. I typically don't look at GAAP earnings. This is not a criteria for me, but the market really cares about GAAP earnings. So this should make Wall Street happy. Growth 25 to 30% each year revenue growth. So again, that's in my low range. That's actually below my threshold of 30%, but that's still very, very high for Wall Street. And it's only trading, as I've shown, at an enterprise value of a forward gross profit of 3. So that is one of the cheapest stocks in my universe. So will I be buying figs? Figs is now officially on my watch list. I haven't purchased it yet, but it's on my watch list. I am waiting for the next quarter, and we'll probably make a decision. I like figs. I think figs is a very interesting company, and I just can't, and let me show you that chart again. I can't forget about what happened to Lululemon, a 20x for a similar business model. To me, that rings a bell when I hear that. 20x in 13 years was that. So this is not investment advice. This is just entertainment, as you know. No investment advice. Please like, please subscribe. I appreciate any likes and subscribers that I can get. Thank you so much, and have a wonderful day.